Investors and economists now believe the next move by the Reserve Bank will be an interest rate cut rather than a rate rise after underlying inflation came in only slightly above the official forecast in June. In this video, I'm going to break down what it means if you're in the home loan market, if you're considering investing, so you'll want to keep watching. The trim mean inflation, the Reserve Bank's measure of underlying price pressures, eased to 3.9% in June from 4% in March. The outcome was only slightly higher than the Reserve Bank's official forecast for trim mean inflation at 3.8% and softer than markets expected. Trim mean inflation in the 3 months of June was 0.8% and in line with the forecast. Now, this data has led traders to dramatically revise their interest rate bets just after it's been released. Now they're saying all bets are looking to be off for rate rises next week. The markets are now saying there's a 7% chance the RBA is going to cut the cash rate in the next August meeting, and a 1 in 2 chance to lower the rates by November. A rate cut has been fully priced in by the markets by February 2025. It's interesting, the Commonwealth Bank has just come out and said that they're sticking with their rate cut expectations in November this year. This is a pretty controversial view. The Reserve Bank has raised its interest rates by less than its foreign peers in an effort to keep the jobless rate as low as sustainably possible, and at the cost of potentially having to deal with higher inflation for longer. I'm sure everyone's been feeling the inflationary pressures in everyday services, including labor-intensive services, which have increased to 4.5% in June from 4.3% in March. This includes simple stuff like the cost of going to vet, which has increased 6.7% over the last 12 months, the price of a restaurant meal up 4.1%, and the cost of a haircut, which was 5.6% higher year on year. Insurance prices have increased by a crazy 14% as insurers have raised home premiums to offset the cost of natural disasters. And the housing sector, as we well know, has been a continuing source of inflation. Rent inflation actually edged lower to 7.3% in June, but it remained close to the fastest rise since 2009 as a lack of home building and strong demand drove low vacancy rates. With the largest weight in the CPI basket, housing costs continue to be a key driver of inflation in the quarter. The food group contributed 1/4 of the increase in consumer prices. The volatile fruit and veg component experienced a large 6.3% quarterly increase, led by 10.6% quarterly increase in fruit prices. The ABS notes that unfavorable growing conditions contributed to a large price rises for grapes, berries, and tomatoes and capsicums. This led to the highest quarterly rise since 2016. Interestingly, with the CPI for the cities, Perth recorded the largest quarterly increase in consumer prices at 2.1%. That was largely led by a 44% increase in electricity prices from the unwinding of the second installment of the Electricity Bill Fund Relief Rebate. Hobart recorded the smallest quarterly increase at just 0.1%. So interesting to see the latest forecast. This is a pretty big game changer because as early as last week, people were saying there's potential for rate rises next month. It's looking pretty unlikely, with the annual rate decreasing to 3.9%. As CBA have said, and I'm sure as more commentary is going to be made over the next couple of hours, it's looking likely the Reserve Bank will keep the cash rate on hold next week, and they don't actually consider the meeting live. And they're still saying that there's potential for a call to start easing as early as November 2024, but the market's actually pricing in a rate rise or rate easing to start from February 2025. Either way, this is going to be good news if you're a homeowner and you're worried about the costs of interest rate rises. If you're considering fixed rates, it could push you more down towards a rate of variable, especially if the market's pricing in rate cuts over the next 12 months. I'd expect to see those short-term fixed rates start to come down. They're still oddly above the variable rate, so we'll wait and see more movement there. And what do you think? But if you're a property owner, it's actually looking like pretty good news if there's going to be rate cuts on the horizon. I'd love to know what you think. If you're thinking the rate's going to go up, leave a comment below with an arrow up, down, a thumbs down, and let's see what you think out there. Thanks so much for watching. If you've got any questions, make sure you hit us up at huntergalloway.com.au. We're the home for home buyers across Australia.